Hi and welcome to the Financial Fox. I hope you are all keeping well and stay safe in these kind of crazy times. The economy is very volatile at the moment, uncertainty is ordinary, and financial markets are just trading on hopes, let's say. So they are not actually reflecting what is going on in the economy and what is going to expect us. So what I would like to do today, I would like us to reflect on market dynamics, put the spotlight on money, the current monetary policies that drives our economy, impact our lives, businesses and investments. And also want to talk about the role the Bitcoin plays. What do I mean by that? So we are going to review the impact that coronavirus has had on the current economy and financial systems. We are going to reveal the limitation of fiat currencies and the opportunities offered by cryptocurrencies and decentralization. First of all, you don't need to be a crypto geek to follow this video. Actually, it's better if you're not. As long as you are an investor, trader, and you are curious about Bitcoin, you should look at this video. Our guest is Robert Breedlove. He's a founder and CEO of Parallax Digital, a Bitcoin digital security and fund advisory. Robert describes himself as a freedom maximalist and a writer, and today we are going to find out exactly what that means. First of all, he's not only a first proponent of Bitcoin, but he has publicly criticized financial institutions and governments and their monetary policies that manipulate our economy and our society, creating wealth disparity and capital destructions. Basically, they are keeping a legal monopoly on money, where people are kind of stuck in a mouse trap with no freedom and evolution. This is actually where Bitcoin comes in. So it's my pleasure to get Robert to join us directly from LA. Hi, Robert. How are you?
Doing well, Steffi. Thanks for having me.
Well, so today I really would like you to explain the role the Bitcoin is playing in the economy, in the future, or in the real money, let's say. But let's start with just looking at what is happening in the current financial market when, the stock, yes, they went down a lot, but they have been recovered and they reach higher level than before the coronavirus. That's obviously because the Fed has been pumping a lot of money into the economy. But I mean, we are approaching recession. So why you think this is happening and what we should expect?
Sure. So on March 12th, which a lot of people have come to call Black Thursday, there was a global liquidity crisis. And in these types of events, correlations converge to one. So we saw everything contract together. Equities, gold, bonds, Bitcoin, everything contracted. And, that was basically the release of a lot of hidden risk that have been accumulating in the financial system over time. There's been a lot of leverage accumulating. And it looks like we might be moving next into the insolvency phase where things get really ugly and we have 24 to 36 months of recession. But essentially, this is all, at the root of all of this is excessive central bank expansionary monetary policy. They just have, for the past 100 plus years, they've continually printed more and more money and created this illusory effect in the stock market such that equities appear to be appreciating nonstop over the past century. And it looks like with the latest rate of acceleration in money supply increase that we may actually be entering the early stages of a currency failure. Both in emerging market currencies and then ultimately as they fly to the dollar, which is being expanded relentlessly now, we may see the dollar start to show a lot of inflation as well.
Where do you think the inflation is? I mean, we don't know which level the inflation is going to reach, but do you think it's going to go over 20%?
It's hard to say, exactly when and what percent it will go. And it also comes down to how you measure inflation. And I tend to just look at expansion of, in the US, we have M2 money supply. You could look at global M2. But that is the real proxy that you want to look at, because that's how much liquid currency is going to be coming into the economy. And that's what things are being denominated in. That's what prices are being denominated in. So one of the perverse consequences of inflation is that it appears that your equities and other, your bonds and whatnot are appreciating on a nominal basis, but in fact, it's just inflation driven. So it creates a lot of noise in the channel, if you will, and that you cannot distinguish between what appreciation is driven by inflation versus what appreciation is driven by fundamentals. So in that sense, central banks are basically outright market manipulators. They're there to counterfeit currency and distort prices.
I mean, if we think annualize, the annualized increase in money supply has been over 105% over the last, 12 months, but the big jump was actually in the last 3 months, which is crazy.
Yeah, I think when you look at M2 from, at least the US M2 from 1971, we severed the peg to gold, and that's when things got bananas. They just started printing money and expanding debt relentlessly. If you look at that chart from 1971 to today, it's a full parabolic chart. So we're a very late stage monetary expansion. And, these things, they don't end well. You can look at any fiat currency experiment throughout history. They all end in the same way. They all end in hyperinflation.
So talking about that, obviously we are individual that we think we are free or we want to be free, and we all talk about these free markets and stuff like that. So it's basically all bullshit. What basically captured my mind is when I was reading your blogs was about the importance of hard money and how hard money is key to any free markets. Would you mind maybe to explain that and why fiat currency are actually soft money, and for example, gold is self-sovereignty, so is more like a hard money, even if it was in the past,
Sure. So I think it's first important to understand the emergence of gold. A lot of people, everyone knows that gold is valuable, but very few people understand why. And from a first principle standpoint, there are 5 properties that make money valuable. Money has to be divisible, durable, portable, recognizable, and very importantly, it has to be scarce to maintain its value. So historically, the monetary metals best fulfilled those 5 functions. And of the monetary metals, gold was the most scarce as measured by its stock to flow ratio, which is the inverse of its inflation rate. So by holding gold, you could reliably trust that its supply would be inflated the least over time. That's what made gold money. And the drawback to gold was its physicality, because it's heavy, it's kind of hard to use for day-to-day transactions. So it made economic sense to centralize it, which these are actually warehousing operations. They started out as warehousing operations that would hoard your gold and issue you a paper receipt. Over time, those paper receipts became currency. They were always redeemable for gold. And then gradually, governments took over that function, and they gradually reduced the redeemability of gold, culminating in the Nixon shock in 1971, where dollars would no longer be redeemable for gold.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
So it's been this sleight of hand, if you will, that it was a free market money. We had gold, we had paper redeemable for gold, and then governments revoked the free market element to it. And now we're left with this pure institution of socialism, which is the central bank. It's just paper built on false promises. If you read Marx's manifesto, it's his piece to the Communist Party from 1848, his 5th measure was literally the central bank. He said we have to centralize control of credit and currency to facilitate socialism over the broader economy. So I think that we do actually have free markets in a sense. Soviet Russia tried to socialize the entire economy. That failed for a number of reasons. Whereas in the US, we tried to socialize just half of the economy. We only socialize the money and we leave the rest to the free market. So I think for the same reasons you saw socialism implode in Soviet Russia, because it's just an untenable solution for the long term, we're going to see monetary socialism fail in the US and everywhere else.
But why do you think people are not realizing that? Let's say, Santi, you have got some shares in your account, and the value, is really sometimes not even linked to the performance of the company or the money that you have in cash. They lose value, and that, is harming lots of people. So why do you think people are not realizing they are in this kind of situation where they are manipulated?
Well, there's a number of reasons, but one I think is pretty apparent is that there is no state curriculum that teaches you about money. That's the origins of money, why we selected gold as money, how the government controls money. I myself have a master's in accounting and finance. I never heard one peep of Austrian economics. I never heard one peep of government facing opportunity costs, that the government is a business. In Keynesian economics, which is what's taught in most curriculums worldwide, the government is effectively God. They don't suffer any opportunity costs. They control money. They can print money at will. They can take money out of the economy at will. So this illusion has been perpetrated for over 100 years. And I would argue that it's been rather effective because people don't understand that there is an element of socialism at the heart of every modern economy.
So now we have got Bitcoin, which is kind of very similar to gold as a store of value, but also is a medium of exchange. And I think not enough people are actually understanding what Bitcoin is and why it can revolutionize for the better the economy. So what would you say to those people?
Sure. So an easy way to think about Bitcoin is sort of it's an unstoppable gold, and it's actually superior to gold across those 5 monetary properties that made it money. So because Bitcoin is pure information, it's basically infinitely divisible. It can be subdivided and recombined at near zero cost. Information is infinitely durable because it does not decompose over time. It's infinitely portable because you can beam it around the world at the speed of light thanks to telecommunications. It's infinitely recognizable, meaning that you cannot counterfeit it. You cannot manipulate its supply in any way. And then very importantly, Bitcoin is absolutely scarce, which means it's the only asset in history that has a provable absolute scarcity, has an absolute hard cap. That's not even true for gold. Like if we could all go out and start gold mining today, we could produce a lot more gold. Everything else is a function of our time, but Bitcoin is a certainty. It's 21 million. And it's following actually the same evolutionary path that gold did when it monetized. So gold was originally a store of value. Then after it accreted enough value, it became used as a medium of exchange. Finally, when it was adopted widely enough as a medium of exchange, people began to denominate prices in it. So it became a unit of account. So even us thinking today in dollars or our local currency, we're thinking in gold because those dollars used to be redeemable for gold. Again, it's this illusion that took place under the surface that sort of hijacked our conception of money. And the interesting thing about Bitcoin, though, is that because it's non-physical, it basically cannot be hijacked like gold was. You don't need to centralize Bitcoin for it to operate. You can hold your own keys, and it resists confiscation. So like here in the US, we had Executive Order 6102, where the government confiscated gold from private citizens when they were trying to implement fiat currency. So Bitcoin is, in that sense, is kind of like a theft-proof money that's superior to gold.
So what would you say about many concern there's been reason about energy consumption for Bitcoin?
Sure. So to add assurances to the scarcity of a supply, you actually need money producers that have skin in the game. So they need to make an expenditure of energy to guarantee the scarcity of the supply. And this is, again, the same dynamic that holds for gold, because basically the energy and cost necessary to get gold out of the ground represented its proof of work. Yeah. That's what gave it its scarcity, right? That you couldn't just print gold, you couldn't counterfeit gold. So that's the proof of work necessary to procure gold is what gave it its scarcity value in the marketplace. So Bitcoin has essentially adopted that dynamic for itself, but instead it uses a computational algorithm. So miners worldwide compete to solve a puzzle to earn Bitcoin. And this puzzle becomes more difficult the more miners come online trying to solve it. So it's an ingenious capitalistic game that emulates the economic dynamics related to gold, but actually perfects them.
Right, so it's adding even basically more value.
Yeah, it's more scarce than gold, and it's quantifiable, by the way. There's a measure called the stock to flow ratio, which is just the inverse of the inflation rate. So the stock is the existing supply, flow is newly created supply. Historically, gold has about a 55 stock to flow ratio, meaning that it inflates around 2%, per year. And every 4 years, Bitcoin's inflation rate adjusts downward by half. And that the most recent one of these events was in May. And as of May, Bitcoin and gold are now on equal footing. They both have a stock to flow ratio of about 55. But come May 2024, when Bitcoin goes to its next halving event, its stock to flow ratio will double to 110. And at that point, we've never had a monetary asset with a stock to flow ratio in excess of gold. So all historical signs would lend us to believe that Bitcoin would start to outcompete gold and other stores of value at that time.
So do you think that governments are going to start to buy gold in order to kind of take control? I mean, we are seeing what is happening with Iran. The US dollar is basically dominating any transaction. For example, even oil, is all in US dollars. So do you think this is actually going to happen, that the governments are starting to take some chunks of Bitcoin?
Well, central banks have been buying gold, and they always do this. Anytime there's a lot of money printing, they buy gold in tandem because they're basically hedging against their own shenanigans, and they also manipulate the price of gold to defend the value of their fiat currency. So that's how fiat currency exists, because central banks monopolize a position in gold. So if indeed Bitcoin is superior to gold, like, it's incumbent upon them at some point to start taking exposure to this network just to ensure themselves against being disrupted.
Yeah.
And it's quantifiable. If a central bank determines with even a 0.1% chance that Bitcoin poses an existential threat to gold, which is the foundation of their entire business model, it's prudent for them to allocate at least 0.1% of their assets into Bitcoin to protect themselves from disruption, essentially. And this, it engages a game theoretic situation at a geopolitical level, where, like, we see Iran today mining Bitcoin to circumvent US sanctions. So all of a sudden, if Iran has exposure to the most superior monetary technology that's ever existed, every other country is sort of looking at each other thinking, we have to do the same.
Exactly.
We don't want Iran holding territory on the network that we're not holding territory on. So it spins out of control really quickly in a really interesting way. But the default strategy is just take territory on the network.
And also another thing, why Bitcoin and no other cryptocurrencies? I mean, there are so many others out there, but there are a few they actually build good use cases. And you still think the Bitcoin is going to be the one that is going to make the disruption. Why?
Yeah, this is a great question, and it has a really nuanced answer. And I actually wrote an entire piece about this, trying to explain it very thoroughly, titled "The Number Zero and Bitcoin." The real short answer is path dependence, but that's a concept a lot of people don't understand. So essentially, Bitcoin was released into the world at a time when there was no comparative technology. So it was launched into a chat room, basically, and people were able, it's an open source tech, so it's fully visible, and people were able to adopt it naturally over time. So it grew organically on the internet, essentially, in the global free market, to become money. And money is valued based on its liquidity and its network effects. And for Bitcoin as well, the third property is its security. So the more miners are on the network, the more secure the network is, the more resistant it is to attack. And basically at this point, any incumbent money that tried to compete with Bitcoin would have to be more divisible, durable, portable, recognizable, or scarce, right? That's the only way you can compete with Bitcoin. But Bitcoin's optimized all 5 of these properties. So it's perfected the properties that make money money. And it's had this 10-year head start such that everyone is already mining it. It's already the shelling point of money, which is a game theory term for the default strategy you employ when you can't trust other players. And game theory, very simply, a game is just any situation there can be winners or losers, like a market. A strategy is just a framework for making decisions. And again, the shelling point is just your default strategy. So Bitcoin's kind of like the ultimate default strategy for money. Like, the best strategy is to just hold it. And in that sense, all other crypto assets, they've just copied the code of Bitcoin to either try to compete with it or to try to enable other markets. So Bitcoin is more like the internet, like it's something that can't be attacked or disrupted. No one controls it. All other crypto assets are more like companies. They're like liquid venture capital.
I quite like the comparison you made with the internet, because with the internet, for the first time, we have got the freedom of circulation of information and sharing. And with Bitcoin, we are actually going to move into a money decentralization, which is going to give more power to individuals. And probably Bitcoin was already included in the process of the internet.
That's right. In a very literal sense, a lot of people call Bitcoin the internet of value. And if you understand, the internet was built in layers called the Internet Protocol Suite. So things we're familiar with like HTTP, TCP/IP, these are all different protocols that are built on top of one another. And the internet is just that stack of protocols for moving information in a way that no one can stop, basically. And in that sense, you can think of Bitcoin as the fifth layer to the Internet Protocol Suite. It's just an open set of protocols for moving value on top of the internet that no one can stop. So in that sense, it's a very potent value proposition. And the other thing I think will drive a lot of demand for it is we see governments teetering on the edge of bankruptcy right now. And when governments get into this situation, they become more overreaching, let's say, with both fiscal and monetary policies. So they try to redistribute wealth, they try to increase taxes, print more money, all these sort of exotic measures. And when that happens, those are all purely mechanisms for confiscating wealth. So I think you're going to see a lot of demand from super high net worth individuals to shelter wealth inside of Bitcoin, because it's the only asset, it's the only imprescriptible property right in the world, meaning that it's a property right that cannot be revoked by government prescription. Literally, if you hold your own keys, it's like holding physical gold, but you don't have to hold anything. It's just information. So I think there's going to be a large demand driver there as well.
So what would you say, just to wrap it up, what would you say to people, investors, they are not holding any Bitcoin right now, but they have got equities, they've got kind of investment, just something to open their eyes and say, hey guys, you should actually look at this and maybe you should shift just a part of your portfolio. What would you say to those people?
If I have 30 seconds to tell someone about Bitcoin, I tell them flat out that think of it as an insurance policy against central banking, the policy becomes more valuable the more money that is printed. And we've printed more money in the past 6 months than we have in the past decade. And even if you look back over the past 100 years, we have to all realize we're all living under a central bank illusion. Like the fact that equity markets always go up, the fact that companies always get bailed out, there's always more money to print, that's all an illusion. And I know it's been a long time and we take it for granted now, but we've seen these things come and unravel every time throughout history. Fiat currencies have been tried since, I think, 5th century China. They always fail. This isn't hyperbolic. Every single one of them fail. The only two that haven't failed yet are the US dollar and the British pound.
Yeah. Thank you so much, Robert. That was really great insight. And, we are going to see what's happened and also how Bitcoin is going to perform in the next few months, because I think they're going to be pretty crucial. The Fed is not going to be able to carry on this situation. So I think we are going to see some kind of signals as well of people taking more Bitcoin. Thank you so much.
Thank you so much, Steffi.
Thanks. So this is everything from the Financial Fox today. Subscribe to our YouTube channel so you can stay up to date with our latest interview. And also, please do send us your feedback. That is always appreciated. Bye-bye.